Ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is the Kickstart video for November 14, 2023, where I take a look at the three major currency pairs, the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. So let's get started. US CPI data just was released with the expectations of 0.1% for the headline number. It came in at 0.0%. The core measure was expected at 0.3%. It came in at 0.2%, and that was subsequently reflected in the year-on-year measures as well, with the headline coming in at 3.2, below 3.3%, and the core coming in at 4.0% versus 4.1%. That data has sent stocks higher. We're seeing the S&P up around 53 points. The Dow Industrial Average is up about 322 points, and the NASDAQ Index is up 244 points. We're also seeing yields move sharply lower, with the 2-year now down 17 basis points at 4.863%, and the 10-year is down 14.6 basis points at 4.48%. So let's take a look at these three major currency pairs and see how the data has impacted them. And looking at the euro versus US dollar first, I'm going to take a look at the hourly chart here. As you can see, the price has surged to the upside, and taking a look at I'm going to take a look at the daily chart here. And what we've moved up to is to test the two daily moving averages, the 100-day moving average and the 200-day moving average. That's the blue and green lines in these charts. 100 comes in at 1.0791. The 200 comes in at 1.0801. So about 10 basis points or 10 pips separating those two moving averages. The current price is trading at 1.0798. So we're above the 100 but below the 200. Technically speaking, traders tend to lean against these moving averages, at least on the first test, as risk can be defined and limited against the levels. If the price were to move above those levels, then I would expect those sellers against the technical levels to turn back to buyers and to push the price even higher. Obviously, the fundamentals are positive for the euro versus US dollar off of the data, and it's hard to stop the momentum, except when we do have some key technical levels that traders can lean against and limit their risk. And their hope is that they may have a small risk and make more than a small risk on a rotation back to the downside. A rotation back to the downside might take the price down to 1.0764. It may take the price down to 1.07509. That is this swing area through here on the daily chart, and the 38.2% retracement of the move down from this high to this low. So these are just traders who would be leaning against this level, hoping for 30, 40 pip rotation back to the downside on the fact that it held resistance. That's what they're basing their trade on. Just be aware and be prepared that this is going to be a tough nut to crack. If we get above it, however, look for further upside momentum in this currency pair. Going back to the hourly chart, the price is really, in areas that we haven't been to in a while. Looking at the 4-hour chart, there's some resistance up here, or a target up here at the 50% retracement of the move down from this high going back to the July. That level comes in at 1.08613. That would be the next major target on the upside for the euro versus dollar on continued upside momentum. Taking a look at the dollar versus yen, it has moved sharply to the downside. In the process, it fell below the 100-hour moving average. That's a blue line in this chart. We also fell below this swing area right through here, which in the short term has been a resistance and then support level in this period right through here. It's fairly easy to see, and we fell below those levels. This is going to be a risk-defining level for traders. As long as the price remains below this level, the bias remains more to the downside. Now, on the downside, the price has moved below the 38.2% retracement, but just like the euro versus US dollar, we're running into a support area, and that is defined by this swing area right through here between 150.71 and 150.77. Also in play is a 200-hour moving average. That 200-hour moving average is the green line in this chart, and it would take a move below this area to increase the bearish bias, have traders looking toward the 50% retracement at 150.548. Remember, it wasn't long ago that we were looking at the 150 level as a ceiling for this pair. Now we did move above it in the month of October, at the end of October, and then came back below it at the beginning of November, and then moved back above it and been above it for all of last week as the market trended to the upside. So there is room to roam if this 200-hour moving average can be broken. Recall yesterday as well, we moved up to this level, 150.904. That got within 3 pips of the 2022 high. I'll show you right where that comes from. If you go to the daily chart and look at this high right here, it comes in at 151.93. The high price yesterday came at 150.90, so it got within about 3 or 4 pips of that level, and then moved to the downside. So we are, and by the way, this high is the highest level going back 32 years. So to have a double top up there at the 93 level and have the data now push the dollar to the downside, there's room to roam on the downside if if this is a turning point for the dollar, for the dollar versus yen in particular, which has just seen higher and higher and higher levels over time to the point where we're at 32-year highs. So be aware there's room to roam on the downside for the dollar versus yen if this train gets going. So let's take a look at the sterling versus US dollar to conclude our report. And as you can see, it is surging to the upside here after a nice base against the 200-hour moving average. Kind of comes in after the fact. That the price was trading right at the 200-hour moving average before the data, and that price moved sharply to the upside. So we are breaking to the upside here in this currency pair. Taking a look at the daily chart, where do we sit? We're moving up toward the high price from early November. That high price came in at 124.283, and as you can see, that high price got within about 8 pips of the 200-day moving average at 124.368. The price has closed below the 200-hour moving average since September 14th, so getting above that 200-day moving average would be somewhat positive for the sterling versus US dollar. If I put a Fibonacci retracement from this high to this low right here, that the 38.2% retracement is just above the 200-day moving average at 124.58, and then we have the falling 100-day moving average at 125.12. So like some of the other currency pairs, there's room to roam in this in the sterling versus US dollar to the upside as well, but we do need to get above the high from November and also above the 200-day moving average. That would be needed to increase the bullish bias. So there you have it, a quick look at the major currency pairs to kickstart your trading. My name is Greg McCloskey. Good fortune with your trading. Bye.